What's up, guys? Welcome back to another weekly update. It's Bitcoin Bully here. I'm making this video today for me mate Dangerous Dave, right? So Dave's in a predicament where, like a lot of people, where we've been hearing other people that we respect and trust and listen to say, hey, now's not the time to start buying. I think you should wait. Now, this isn't financial advice, okay? This is only my own opinion. And what I want to get at is, the first thing I want to get at is, in the book Richest Man of Babylon, it speaks about only take advice from somebody who's proven themselves successful in that area. Yeah. So you might be chatting to someone who's a fucking genius. He's started 4 companies and he owns a bunch of property, et cetera, et cetera. Does that make that person a good crypto trader? So when you're listening to people talk about Bitcoin, the first question you have to ask them is, how much fucking money have you made off crypto? And you don't have to ask how much cash. You don't need to hear figures. What percentage gain has your crypto portfolio gone up? Were you buying Bitcoins at 3,500 in 2018 and at the coronavirus crash? Did you distribute across the top? Have you killed it? Because it's funny, everyone becomes an expert and it's dangerous. You've got to really separate yourself from the news, from everyone's chit chat, because it's very easy to listen to people that might have no idea what they're talking about when it comes to crypto. Shit, I always forget. Guys, if you enjoy this content, please like the video, subscribe, share it with a friend, leave a comment, whatever you can. It really helps the channel, and I'm sick of being on 130 subscribers. Thanks, enjoy the video. That's step one, right? Do your vetting on who you actually trust. It may be successful. Are they successful in crypto? Because it's different things. How much time do they put in every single day to studying it? Do they have their emotions in control? Or like Jamie Dimon just came out and said, oh, there's a hurricane brewing in the economy. If that person's listening to Jamie Dimon because they're a big, JP Morgan, Wall Street, straight down the line guy, is that person taking his advice from Jamie Dimon? Because there's moments where Jamie Dimon has said in the past that crypto is fucking rat poison. And at the same time, JP Morgan was setting up a trading account in Europe. And the same weekend that Jamie Dimon said that, the trading desk that JP Morgan bought was the biggest buyer of Bitcoin that weekend. So sometimes you can't listen to certain people. And even if the economy is about to go into a hurricane, does that mean that the markets are going to continue into a hurricane? The markets they react in advance. They react to expectations. Right now, with the Federal Reserve, these are all about interest rate hikes. This is our target to get our interest rate hikes there. So that's where everyone's expectations are. It's going to get there. So any expectations get factored into the market early. They've said they're doing quantitative tightening. They're taking $1 trillion out of the market. They've told everybody that, and it starts now. Now it's like buy the rumor, sell the news. They've told us what they're going to do. So the price isn't going to get hit once it already gets done. The price gets hit once they tell you. So you've got to be a bit of ahead of the curve like that. Now, when it comes to crypto's different. Yes, there's correlations, but crypto is its own beast. And you've got to, you take, again, not investment advice, but you've got to listen to someone who lives and breathes this, and then make your own decisions from that, right? So, so what have I done? Have I had a good run? Look, I've screenshotted some shit before. It might be too much information, but in 2019, this was my bank account in America. I had $1,000. And then in my Australian account, I was on fucking Centrelink, broke, right? And at the same time, I was studying crypto hard. And now in the past 2 years, I've bought, this place was my first one in October 2020. And this is like a luxury apartment in Perth. This is all from crypto trading. This is the second one, a luxury apartment in South Perth. And this is the third one. I split a full retreat with my mum. So I went from having no money to having 3 places in the space of 2 years. Crypto is my fucking jam. And so you've got to, I think I did about 2,000%. I borrowed some money and just blew it up. And it's because I don't listen to any other people, right? Who do you take your investment information from when it comes to crypto? Some guy who's successful in other areas, or the guy who's gone from like having $2,000 in his account to owning 3 places in 2 years? I live and breathe this shit. So let's dive into the market and let's dive into where we're at. The first thing I want to show you is the Rsi Falling Wedge. So pretty much on every time frame, let me do this. Pretty much on every time frame, the relative strength index is forming a huge falling wedge. And falling wedges eventually break north, and when they break north, price goes with it. So we've got, this is the falling wedge through here. Dink and dink. And we're going into this compression pattern through here that eventually, mark my words, this will eventually break out of here. And when it breaks out of here, it'll signal the end of the bear market. And so there's not that much time left. There's a few months, right? We're in June here. You got July, August. By 100% by the end of September, this downtrend will be over. So this falling wedge is on every single time frame, and so I can show you some crazy examples of where the RSI has just been absolutely spot on in the past. But you know, I'm going to work through a few different things, so I'm not going to stay on it for too long. But these eventually break north. The next thing I wanted to show you guys was the Stochastic Rsi. So this is a pretty impromptu video, but the Stochastic Rsi tells you about the strength of the rally. So, and we can put it on different time frames as well. So if we zoom out to, let's say, a monthly time frame, we can see that the Stochastic Rsi is at pretty much the lowest point in momentum that it's ever been in the history. And so if we zoom this chart down, we can see that when the Stochastic Rsi was down in these lows, it was near the bottom of the bear market, right? Same through here. When the RSI was down near these lows, we're near the bottom of the bear market. And so with Stochastic Rsi, this momentum is going to eventually shift, and it's going to do that. And when that happens, it signals the start of the bear market. So, you know, maybe it hangs down here for a few more months, but this momentum is going to shift. So anyone that's telling you that this isn't a good place to start accumulating is fucking retarded, because, you know, it's just as risky to not take any positions as it is to take too many positions, right? You could sit there on the sidelines forever. When's your entry? In the big scheme of things, what's the difference between 20 and 30? It's not a lot. Last time it bottomed at 3,200. I got in at 3,800. So it dropped another like 25% from where I got in. Now I look like a fucking hero buying at 3,800. That's going to be the same again in the future. You don't want to sit here and wait. I reckon if you're waiting for teens, you're never going to see it on Bitcoin. And it's risky, because then if the price starts going up, when do you get in? Minimizing risk also means accumulating when it's scary, even if it's slowly. And mark my words, the next 3 months is the accumulation zone. And if you don't start taking positions the next 3 months, you're going to be on the sidelines kicking yourself. All right, difference in gains and time frame. This one I find really interesting because, you know, in this bull market, the price, so this was like 2015 up to 2017. The price went up 11,500%. So this bull market, what is this one? Can we get rid of that? This bull market that we just had, from the very bottom here, well, the very bottom was back here, to the top there, we did set 1,700%. That's this monumental difference between 11,500 and 1,700. And so this one had an 85% correction. It's more warranted an 85% correction when it's done nearly 12,000%. When it's done 1,700%, it doesn't have to have another 85% correction. So people are talking about, 85% would bring it down to like $12,000, $13,000, $14,000. So we're not doing an 85% correction. And I'll show you another reason why. It's because this one was, this bull run here in 2015, 16, 17, that was straight up to crash. We've gone straight up to sideways. So a lot of it's like we're doing the consolidation zone now. Normally you go up, down, consolidate. Now we're like up, consolidation and down, yes, but we're not coming in from a huge gain right now. Like we were already at these this price here that we're at now, we were at that price 547 days ago. So we're already back to prices from a really long time ago, if that makes sense. Like, you know, the bottom here, it was the same price 520 days before. So I hope that makes sense, is that like we're not fully overextended, we've already consolidated. So the chances of it being an 85% correction when we've already had a good consolidation for a year and a half, it's just less likely. All right, next. The fear and greed index it's been phenomenal in the past for picking, letting you know that there is so much fear in the market. It's way easier to listen to somebody telling you it's going to keep going down when there's this much fear in the market, because you're already fearful. So it's like, oh, you think it's going to keep going down? Yeah, cool. I'm going to sit on the sidelines, rather than being that guy that's like, fuck this shit, everyone else is scared, I'm going to go I'm going to go to town now. So we've got fear and greed down at 15 last month, 18 last week, 16 yesterday, 13. We're sitting at pretty much record lows. We're down here. We're at record lows for fear and greed. We're in peak fear. And look how long it's been down there for as well. Like if we look at these bits, this was June 2021. So that's when the price went from 60 down to 30. And then from 30, we doubled, right? So this was a phenomenal time to buy. This is March 2020. This is coronavirus crash. This phenomenal time to buy. You know, the 2019 was a great time to buy for a lot of the year. This is November 2018. December 2018 was the bottom, you know? So when the fear and greed's down here, it's a good indication, hey, everyone's shitting themselves. What are you going to do about it? All right, Deca cycle. This one involves a bit more of an explanation, so it's going to take a bit of time, but I want you to bear with me, okay? There is a thing called the Elliott wave theory. Elliott wave theory. Now, I'm not too big on Elliott wave theory as a thing that you're constantly referencing, but there's a couple of things in the history of Bitcoin that did perfect Elliott wave theories. Now, this is what it looks like. Let's crack one open. That looks like it's got better resolution. So Elliott wave theory, it basically has 5 waves. So it indicates the price of something goes, and it's across lots of different markets, definitely not just Bitcoin. Here's a guy from like the 50s or something that had this theory. Anyway, it goes 1, 2, 3, 4, 5, and then A, B, C. Okay, and then within those 5 waves, you've got little ones. They go 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5, A, B, C. You get it. So within the big one, you've got little ones. Now I want to show you something that I think is just phenomenal. So try and bear with me, because I actually think it's just I've never seen other people speak about this, and it's just like that. It was a perfect Elliott wave. If we zoom back to the 2017 crypto bull run, if this would load, let's take those moving averages off. We should look at some moving averages as well, just to get you an indication of like, wow, we're massively oversold. Maybe it is a good time to accumulate. Bear with me, okay? So 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5. Yeah? And then A, B, C crashing down. So this was 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, A, B, C. This one was the perfect 1, 2, 3, 4, 5 to the top. So it's just interesting for me to see that this rally was a perfect Elliott wave theory. So how do you categorize certain things? Is like wave 1's usually an impulse wave. It catches everybody off guard, and it's fast, and then it gets rejected hard. That's wave 1. So you can see this is the wave 1 of wave 1. It was exactly that, fast, catches everyone off guard, and then whack, smashed back down. Now, why do I want to show you that? And each wave is characterized by different things, right? So if we zoom back to the entire history of Bitcoin for a second, let's switch this to the weekly chart, possibly even the monthly chart. I'm just going to take all the shit off it. So this is the full history of Bitcoin, right? So we're going back to 2010 here. This was wave one. It caught everybody off guard. It was an impulse wave, and then it didn't last. It didn't last very long, and it got smashed back down over the head. So that's wave 1, 2. This is wave 3. It's the longest of the waves and usually has the most gains. So 1, 2, 3, 4, 5 is the last final blow off top before we have a big ABC correction, and that is A, B, C. So we just did 1, 2, 3, 4, 5, A, B, C. So what happens next after that? You have an impulse wave that catches everybody off guard. You have wave 1 again. So remember, an impulse wave is a wave that catches everybody off guard, doesn't last very long, and then gets a harsh rejection. So what is this? That's wave 1. That's an impulse wave. It caught everybody off guard. It didn't last that long, but mad gains in a short period of time. When we take this off log scale, it is literally just doom, 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 doom. Look at that. Bam, out of nowhere, smack back down, and then now we're going through our consolidation. So if that's wave 1 that we just finished then, this is wave 2, right? The bear market, it didn't start here. It started here. But what this correction is a expanded flats correction. Expanded flats correction look like this. So that's the wave up. An expanded flats correction, it means that it goes A, B, C, right? So it means the B wave takes out the A wave. Takes out the start of A wave. So B wave goes a little bit higher, and then C wave goes a little bit lower. A, B, C. So that's what we're doing right now, is the A, B, C. So we're getting close to there's a chance that we bottomed, man. There's a chance that was the bottom. Maybe it goes a little bit lower, but that's an A, B, C correction. So wave 1, 2. So we're gonna enter wave 3 next. And just like last time, wave 3 is a really long one and it has massive gains. This was wave 3. So I'm expecting something similar to this to come from here. All right, so that's my Deca cycle theory, and I think it's gonna play out. And I think this was wave 2 getting near completion. So what's next on the rip through the list? I mean, we can look at moving averages for days, and we can see that when the price has never really ever stayed below this purple line's the 200 weekly moving average. Look how close to it we are. Are we going to get down to it again? I don't know. Everyone's waiting for that, and if everyone's waiting for it because I've seen it's the best buying opportunity, does it not get down that low? But either way, the 200 week moving average is at 22,000. The price is at 30,000. It doesn't really make a difference, but the fact that it's only 30% off difference. And to still think that it's not a good time to start accumulating, mate, I'll take that to the grave that you're wrong there. Now, okay, let's look at the flip side. Yes, it's scary with the markets. Yes, it's scary going into a recession. How long does quantitative tightening last for? How long does inflation last for? They're all scary things to look at, but markets are fucking scary. And we're not waiting for the recession to bring the market down. We had expectations bring the market down. So I'm going in hard now. And even if it drops to, like, I'm slowly going in. I'm currently half in and I'm still working the market. And I think you got a few more months to get a good entry, and then you've got to pull the pin. These were my entries last time. I put all of my mum's cash in here. I wonder if I've got a, let me have a look for something. Bear with me. I'm going to leave it there, guys. That's it for me today. You know my stance on it. We can look at WAS. Something else I want to show you is, I've spoken about this quite a bit in my videos, is that we've just fallen into a new channel. This is our new channel through here. I think we stay in this new channel for a really long time. If we zoom in here, we can see, look at that, perfect. Look at this rejection. Hold on, I'll switch it to the daily chart. We can see that the price came straight up to this line and got rejected. I took a short out here, and now that short, 65% within a week, just from using that channel. I don't think we're ever going to get above it. So I've got a strategy in mind where we accumulate, we hodl, and then we also play these trend lines. And I think it's going to make bank us out. This is when the Bitcoin's price is at 55,000. And this is what I'm posting on Instagram. Exactly 1 year ago, coronavirus liquidity crash happened. The smartest investors in the world were piling into stocks and crypto at ridiculously low prices. Those same investors are now reaching long-term capital gains tax. That's including me. We're sitting on 1,000% gains. So it wouldn't surprise me. There's quite a lot of selling pressure coming from these whales over the next few months. Be careful, make sure you take some profits and have some cash on the sidelines. This is when prices are 55,000. And then over the following sort of couple months, it dropped all the way down to 29,000. So even here, on this date right now, we're in a bubble, too fast, no support. Just screaming at my mates, like, why are you not taking any profits? And this line was here. So that's the altcoin market, dropped from like 2.3 trillion all the way down to 1.2 trillion over the following couple of months. So I'm not always bullish. I'm usually contrarian to the market. And I just, made this video for you, mate, so you can see that I've got a game plan. I've proven myself in the history of this. And I just want you to really ask yourself, are the other people that you're listening to, have they smashed it in crypto? Because it's a different beast to everything else. All right, guys, thanks for watching, and I hope you enjoyed that, and I'll see you next week.